So if we pan out a bit, I'll just start to talk about why I'm interested in this chart and why I'm using it as an example for beginners who are looking to start out on their trading career. The reason why I've got pull this one up is A, because I'm buying into it, and B, I think it's a nice technical clean chart to demonstrate. So you can see last week we talked about basic support and resistance. In actual fact, I'll thicken this up a little bit to really make the point. So basically, what gets traders interested, what gets the markets interested, are key levels, for the fire lines, if you like, in the markets that traders tend to respect, particularly when they're retested. So, for example, on this market of silver on a daily chart, so each one of these bars represents the price action of 1 day's price of silver. So on this day, for those of you complete beginners, that's fine. That was the open. So on this day, silver started at $14.02, and it closed this day at $14.14. At some stage during the day, the price was as low as $13.90, and it was as high as $14.20. So that's why you get a green body formed on that particular candle, as they call them, because the price started low and closed high, so it's green. The bars that closed lower are red. So if we've got a line of red bars here, so the trend is clearly down as we keep getting red bars. Then we suddenly get a green one. So there's your buy signal down there at the $14 mark. So once this little trend, or even this trend, is finished, and there are more buyers than sellers, we get a retest, a rerun back to where we came from. So you can see, as you start to, you can take a very simple chart, but put basic support and resistance on there, and then determine whether or not that chart is worth buying, or that particular market is worth buying. Something else you could add now is what the market's like is averages. And if you put a 50-day average on, I always do my 50 averages in blue. So you can see the average is basically telling you where, if you pull back from that, it's telling you where the main trend is. So the 50-day average is bending down, then it starts to curve up, flattens, and then starts to curve up again. So it's just one of many indicators you can use. Now, I do not generally, I use very, very few indicators, because if you have too much on your screen, several things happen. You can't see the pattern properly. You can't see the buy signals properly. Indicators lag anyway. You can see how this 50-day average doesn't pick up the low and doesn't pick up the high. It's just showing you an average. It's cutting in between the price and showing you an average. So that's why I don't have it. I don't have too many indicators on my charts. But it is useful. I mean, once you get a buy signal down here at $14, it's not until this day here on the 4th of December where you get the green bar closing above $14.46, and it closes above that 50-day average. So this is the reason why I put the 50-day average on there is because that is a key average that the market's like. That's a very, very popular average indicator to use. So if a lot of people are looking at it, a lot of people in the market are looking at it, I need to have that on my charts so that I can tell what the herd, the masses, what most people are looking at. And every time this price gets too far away from this level, it tends to retrace. So here you get a close above it. So that's got people interested at that point. There's the buy signal. Now we've got a lot of other people coming into the trade because it's closed above the 50-day average. And then it runs. It hugs it for a bit and then it breaks away. So at that point up here, it's quite a distance away from that average. Whereas here, it was relatively short distance away from the average. And even here, it was relatively short distance. So that's a pretty long distance away from the moving average. So what happens when the price gets up here? It drifts backwards. You see a lot of profit taking. So it's not necessarily a big sell-off. It's not very bearish. It's not the sort of thing that traders are dumping. They are simply taking profits up here and looking for a point in which they think the price is good again. So here we have another little run of red bars followed by a green bar. So that's a potential buy signal. This is a nice big decent wave to the upside. That's what we call a pullback. That's a retracement. There's the second buy. So there's buy signal number one. It runs. It takes a good couple of months to do that. And here's buy signal number two. So if you're in this and you get to the point where the price is very expensive, you might want to take profits up there. Now, in terms of the market, that's a pretty decent move from $13.95 to about $15.50. If you are in an exchange traded fund, or if you are more adventurous with futures market, or maybe you don't even trade silver, there are other ways of trading this. Silver miners. So there's several ways you can trade this. If you find a silver miner, I'll show you some in a minute. And if you have a silver miner and the price of silver is running up, then his profits are going to be a lot, or his or her profits are going to be a lot higher. Okay, so several things going on here. We get a nice buy signal. Then we get confirmation about 2-3 weeks later. Then you get a sell signal about 2 months later with quite a significant amount of profit. So if you are just keeping an eye on this market, if this is a market that interests you, and it very much interests me, then there's buy signal number two. And where does it go? It doesn't quite, or it does eventually go back to this level. So there's quite clearly one entry, quite clearly an exit. Let me clear this up. Quite clearly an exit. So one, I can't draw with this, can I? Exit, so buy number one, exit, buy number two, exit. I tend to take profits just in front of these big numbers, these big resistance levels, because once you exit here, once you take your profits just in front of that resistance, it does eventually come and find the 50-day average, and then you could potentially buy that again on the back of that test of the 50-day average and take that up. So why have I bought this now? So I mean, if you take all of that away, and just go back to basic support and resistance, that is the fundamental technical reason that you may want to buy this market and you may want to take profits up there. So here we are on this level here. There's several reasons why I like the price of this market at the moment. One of them, and this goes for any market, not the fact I'm looking at silver is not particularly relevant. This is relevant to every market. It's on the $15 mark. The markets love big numbers. There's a lot of, it's broken underneath it, which is great. So I'll buy dips underneath there. And if that $15 holds, I think we could go back to $16.25 up here again. Now, if you think of this as you know, a key line that gets constantly hit and attacked, didn't quite get hit there, got hit there. If we get back up, if I'm right, and we get a higher close here, so we had a nice little, you know, quite a lot of red, I mean a green bar yesterday. So I just bought a relatively low risk entry with an emergency exit order just underneath here. If I'm right and we start closing above $15, we could, in a relatively short period of time, go back to $16, $16.25. And every time we touch this area, it gets weaker. It's a bit like somebody sort of, you know, bashing it with a barge pole or something. If we bash that with a barge pole and break it next time, this could go much higher than $16.25 the next time we get up here. Now, ultimately, my long-term view on silver is that we could ultimately go back to the days when we had a price up here. That's very, very close to $20. So if we get back to this price up here and we break through it, we could at some stage, either this year or next, get up to that price there. Now, there's no given in the markets. There's no certainties in the markets, as there is no certainties in anything else. If we start closing underneath that level, so this was resistance here, now it's support. So it's an interim support level, not a major support level or resistance level. So if we close back under here, this trade could be scuppered. I could make a small loss. Bear in mind, I bought a dip anyway. But if I'm right, this market should have another attempt at reaching that price. It's been there before. So no reason why it shouldn't go there again, assuming we close higher this week. So I need to close above $15 on Friday latest. Otherwise, that could be a losing trade. So that's why I'm in the silver. And you can see, so why have I shown you the 50-day average? Because if you see how we respected it at different points. We didn't quite test it there. We got too far away from it here and ultimately came back to it here. So we dithered. We went underneath it, above it, underneath it, above it, underneath it, touched it, underneath it, and so on. So that's why I don't use them as, you know, really important major decision-making indicators. I just use it as a general, I use it pretty much like a guide rope in a museum. Just imagine these are the posts and these are the guide ropes in the museum. At some stage, if you've got too many people crashing through them, there's too many people in the room, they'll break. And that's the same with this guide rope up here. And this is effectively sort of another guide rope up here. If there are too many buyers up here, they'll push through it, they'll barge through it. If I'm right, if I'm wrong, then that's fine. I'll walk away and go and find another instrument I'm looking at. So that's why I like silver. That's why the 50-day average is a guide. It's a guide rope. It's not a major decision-making tool. But if I now need this market not only to close above 15, I need this in the space of maybe another week's time to close above $15.35. If I look at another trade, if I look at a stock that is doing very well that we all know, you can see I've marked this one up. So let me take the markings off. So again, this is EasyJet. So we had a major support level down there. We have a major resistance level up there. And we have an interim level here. And the last time this stock moved up, it didn't get to that interim level. Do you notice something significant about where that level is in the middle? The most significant aspect of that price is the fact it is literally 50%. I'm eyeballing it. I'm not even measuring it. I'm just eyeballing it. You can see that is 50%. So if this market is going to get bought down here, and the main task of a market is to find its way back to the mean average, there is a reasonable chance that if this gets bought, that this price could move from the £10 mark up to 13.42, because that's the mean average. And today this price has just closed above the 50-day average, so that is very bullish, potentially very, very bullish. So the next step is to see if this market can go back to 13, and if it keeps going, the next level that you might see is 13.45 and obviously 13.50. So this is a good stock. We have had one decent move, one decent pullback, two decent moves, two decent pullbacks, well, three pullbacks. So, and this time round, notice how each time it dips and gets bought, the bars get more aggressive. There's bigger, deeper green bars there, and we've got nice, deep, high closes in this one as well. This is cleaner over here. We got a few more red bits, red days in here. This is much cleaner. We've since Wednesday the 10th, or since Tuesday the 2nd of April, we've only had 3 little lower closes, followed by 4 or 5 bigger bars. So this is, in terms of just basic analysis, let's take all of this away. We have a fundamental support and a fundamental resistance in this chart. It's a very popular stock and for minimal risk. So if you're buying down in these support areas, your emergency exit is going to be very close. So these are very low risk entries. And all you got to do is keep a good popular stock like this on your watch list. Look at it. Maybe not once a week. That's all you need to do to find a stock like this. You gather your favorite watch lists. Gather good, liquid, popular, financially stable stocks, and buy them on support, sell them on resistance. And you can tell if they are good stocks from the way in which you're there. They are higher probability once they close above this average line. So here the stock begins to close above the line here, drops again, closes back above the line there, stumbles a bit here as well, and now we are back at above the 50-day average again. You can see why I don't use it as a major tool, a major decision factor in when I'm looking for a good stock, because at the end of the day, if you take that away and leave yourself with support and resistance, that's fundamentally all you need. Okay, and something. What else have we got? Let's look at. There's another stock I'm interested in. I think I might have even told you about this. Let's look at Centrica. This is a stock that had a buy signal here. So it's good that I show you examples of stocks that don't work. You can tell this stock's got problems. If the chart that I present to you or that you see you pull up is untidy, then the chances are the future price movement could be untidy. So it's very ragged here, buying and selling, very ragged here, buying and selling. It's a very ragged chart. However, I did risk a small amount of money here because we had a new low in this trend here and an immediate close above here. So I bought a small position here, and we are still making new lows. So this buy setup that I've used in EasyJet and Silver at the moment is not working, and it was a higher risk trade because it was a very much more ragged chart. However, it's a big chart. It has in the past been a lot better, and it has in the past given profits. That's a pretty nice move. If it does move well, then it's a very nice mover. Okay, so that's the point I'm making. This is another one I think I probably showed you before as well. If I just show you one other aspect of one other indicator as well. This again is not a very clean chart. It's in fact it's even more ragged than Centrica. But so I'm very careful not to overexpose my account with stocks like this. However, there was a lot of history down here, and I thought it was worth buying this. These guys mine cobalt and other materials for electric car batteries. So as we are seeing such a huge swing in demand for electric cars, stood to reason that we might see a decent move in this stock. The other very basic indicator or way that you can measure your charts is, so far we talked about two things. We talked about support and resistance, talked about moving averages, and the other thing that you can apply is a trend line. The trend is your friend till it ends. It's the very ancient adage. So here you have a trend, and it starts very well here from late June 17 till August 17. So you get a few months of a run. hits resistance and drops, breaks the trend line. The trend line is held once again as we pick ourselves up. So we get a new buy signal, new low, new close above. You don't get a dip after that. So that's personally, I wouldn't get in that. But trend lines. So where else can you apply trend lines? Basically, if you apply them just as many touches of the low as you can find, so you get, let me draw that again. I'll use this one. So there's a trend line that's formed from this low and this low. Okay, you don't know that until from the 22nd of June to 6th of December. So you don't know, we've got the benefit of hindsight. We don't know that's going to suddenly drop down there and run up. What we do know is next time that it comes down there, if it holds it, there's a chance that it could go up again. Only this time it's a weak stock and it drops. The reason why trend lines are not as good, and if you stick to the basics of support and resistance, that's by far the easiest thing to look at, because that price down there, £3.23, was far more effective to you than the trend line. But the trend line is a broad brushstroke look at where that market's going. Because if this resistance level fails, if that price is deemed to be too expensive, and you ultimately close underneath this key trend line, then the chances of that dropping is much, much higher. That's a higher probability that that price is going to fall right the way back if you've got several boxes to tick. This is Glencore, sorry. Okay, so let me put EasyJet back. Let's look at trend lines on EasyJet just before we finish. So there's support and resistance and the 50-day average, and on EasyJet trend lines we have a long trend line there. That's a better example actually. So the trend line is formed from that low and that low. So it's it's reversal to the first major dip. It gets respected or almost tested here, almost tested there, and then it just continues to run until finally the trend is over here. Or you get a breach of the bar on that day, another breach there, and then you finally get confirmation this trend is over here. So this trend is in place from the 8th of December 2017, and it's failed in August last year. So once this trend line is failed here in August, these support levels, which came from April 17, then they come into play. So trend line breakdown here on EasyJet, back to support here. So there's the main levels of support here. Okay, so there's three elements in that chart: support, resistance, trend line, and moving average. And that is the three core elements of trading anything, stocks, commodities, anything. So what's included in the course? Included in the course is how exact specifications for the support and resistance, how to find these stocks, how to enter them, the alternatives you've got for different types of brokers, the alternatives you have for different instruments to trade it. You could, for example, you could spread bet this. You could buy the stock. You could buy this in an exchange traded fund that EasyJet is part of. Or you could buy the futures or options markets, which are obviously quite sophisticated and quite complicated. So in the course, in the foundation course, is all of that and much, much more. And scanning techniques to find stocks like this, how to trade them, how to manage a trade. Once you're in a trade and you've got profit in your account, when should you take it? Because you get a lot of profit here, then you start giving some back. A lot of profit here, you start giving some back. Some profit, then it gets weakness. So how do you manage that trade? How do you enter that trade and know when to take a profit? There's 2 or 3 very, very basic techniques, which is discussed in the foundation program. And of course, it's also entirely up to you as well. Different people have different ways of managing their account. Some people don't like to sit in a trade for 2, 3, 4 weeks or 2, 3, 4 months. Others are busy, only want to look at their charts a couple of times a week, only want to do a quick check a couple of times a week. That's fine. So it depends on the sort of risk parameter, sort of person you are and the type of trading you like. And you'll only discover that once you've started to trade and you are getting more experienced, you're building up experience, you're building your learning. Because once you've done a foundation course, there's obviously, I'm still learning on the markets. It's one of those, well, professional accountants, professional lawyers have to keep up a certain level of training every year. That's exactly the same for a trader. You don't just learn one set of rules and keep applying them, because markets can change. There are different situations in the market. There are some stock sectors are very, very interesting. Some of them are very much more risky. Lower probability trades. So all of these factors you need to write into your trade plan. You need to learn as a professional trader so that you can find situations like this and manage them and get yourself into a situation where there's no risk or virtually no risk at all. That's a position that when life as a trader becomes much, much easier. There is always an element of doubt when you take a trade. I'm just going to talk for another couple of minutes now, then we'll finish up. There's always an element of doubt every single time you take a trade, but you have to, that's exactly what trading is about. It's counterintuitive. The best time to buy a stock is normally when the stock has been falling, but has proved to itself, but has proved to you that there is a high probability that you could now buy that and it could rise. So that's what I'm trying to do with the example I gave you earlier of silver. And I'm now looking to see if this has, in the fact that we've got to this low point here and the stock is the commodity is holding above that interim level of support. I'm hoping that a lot more traders are going to get interested in it and they're going to want to buy it and push the price above $15. And ultimately, if you look at this in a higher time frame, so this is a weekly chart, if we close above $15 this week, to have a higher close on a weekly bar, on a weekly candle, is on a chart like this is extremely bullish and could ultimately generate very good results. Okay, so the program that some of you are booked into or some of you are interested in is here. Trade the Easy Way Foundation Program. It's Well, the next one is Tuesday, Wednesday evening of next week. So I've deliberately done short modules in the weekday evenings so that for busy people you can come along and do this online. And then after that, there are modules that you do at your own pace, in your own time, through video. And then we will set up some mentoring sessions in the following weeks, where I'm going to be helping you put the fine detail on your own personal trade plan, and I'm going to be supporting you as you begin to look for stocks that are interested. I, in the meantime, will be helping you and showing you charts and stocks that I'm buying and selling. And ultimately, as you come out of that foundation program and you complete that foundation program, you come out with the relevant training to be, to start trading, the trade plan with all of your risk parameters and your risk rules and details in there, and the ability to go and find stocks and manage a trade. Take a trade and manage it with the best brokers that are out there. And it can all be done with modern accounts. It can all be done with, you can start small. You don't have to have a big account. You can start with as little as £300 and trade very, very small size, test your skills. And the key to this is, once you've got winners, is to look back and analyze, why was that trade a winning trade? And then you do exactly the same. You repeat that with future trades and future stocks that you choose to trade. So the markets repeat themselves, history repeats themselves, and that's what technical trading is all about. So if you're interested, click on that page. The best thing to do is, if assuming you're interested in those dates, is just go to the PayPal button at the bottom here. Use the PayPal button. That gives me all your details. Then I'll be sending out a confirmation email, and then we'll be doing the preliminary work together, and then scheduling mentorship sessions and getting you set up ready to trade these markets. All right. I intended to keep this 30 minutes. I've gone to nearly 40. Any questions at all? Yes, most retail brokers, if not all. In fact, I can't think of I've tested a lot of, one of the big brokers commissioned me to test a lot of their competitors' platforms. So I've seen a lot of platforms. Just about, I can't think of a broker that doesn't give you free charts. These are free charts from a company called IG Index. As long as you trade more than 2 or 3 times a month, they don't charge you for the chart package. Even if you don't trade 2 or 3 times a month, it's only, I think it's about £30 a month, which, when you consider what you've actually got, is not very much money. Yeah, I mean, on a stop loss, if you're swing trading, investing in a stock like this, my stop on this silver trade, my emergency exit order is just under here. So the recent low is $14.85. Now my stop is $14.82. And my entry is right down here at $14.90. So my risk is that much. If the price goes underneath that level there, I get a loss, albeit small. So that's my risk. My reward is that, if it works. So you can see the amount of money I'm risking is very small. Admittedly, this is a target that could take 2 or 3 months. If it works, it could take 2 or 3 months to get up here. And I could choose to take profits at an earlier stage if it weakens on the way up here. But potentially that's the amount of risk for that amount of reward. Yes, I'll happily send you the copy of this recording. I'll send it to everybody, in fact, so you can watch this again. This is the very fundamental of the foundation program, but the actual content of the foundation program is all about, there's lots of opportunities out there, lots and lots. It's a question of, what are the better opportunities? What are the higher probability opportunities? Exactly how do you enter them? And how much do you risk? How do you manage that risk? And when do you take a profit? All right. So thank you very much for your questions. Any more questions, ask them now. Otherwise, I'll say goodbye. I'm going to go and have some dinner. And let me know if you have any questions. Then go to the website and drop me an email from the website if you have any other questions. Otherwise, thank you very much for coming along. And next week, I will follow this series through with another element of this type of longer term trading. So pop back next week if you're around. Bye for now. Thank you. Bye.